In the labyrinthine discussion of fiscal policy, few topics arouse impassioned debates as the future of taxation, specifically the clash between proponents of flat taxes and advocates for universal basic income, UBI. As wealth disparity cuts deeper into the social fabric, the urgent question becomes, how can tax systems adapt to promote equity while maintaining economic vitality? This discourse isn't merely academic, it shapes the livelihoods and futures of millions globally. Imagine a world where each citizen receives a monthly check from the government, no questions asked, funded by a radically simplified tax system. While it may sound utopian, both these ideas, UBI and a flat tax, propose bold, straightforward solutions to complex problems. But their simplicity belies the elaborate economic implications and moral dialogues they incite. In navigating these waters, one must dissect not just the fiscal mechanics, but also the underlying values they promote or undermine. Flat taxes, a system where all individuals are taxed at the same percentage, irrespective of income level, argue for a radical simplification of the existing, often convoluted tax structures. By promoting transparency and reducing bureaucratic overhead, supporters claim it could harness greater compliance and broader fiscal participation. Proponents emphasize the psychological benefit of certainty and simplicity. There is no ambiguity, no myriad of deductions, credits, or brackets to navigate. From a comparative perspective, such a singular tax structure is praised for its objectivity, eliminating the motivation for evasion and the armies of accountants needed to decipher tax obligations. However, beyond the surface of simplicity, a far-reaching debate persists on whether a flat tax system can indeed achieve fairness. Critics argue that a uniform tax rate across all income levels magnifies inequality, permitting the affluent to retain a disproportionate share of their income. Moreover, the application of a flat tax could inherently discourage ascent from poverty, as marginal increases in income are not met with direct governmental support or progressive tax relief. The potential regressive nature of flat taxes, paring back the principle that those who can contribute more should contribute proportionately more, poses a significant moral and economic dilemma in addressing wealth distribution. Universal basic income, or UBI, presents itself as a solution that ensures every individual receives a standard financial income from the government, providing a foundational economic safety net. The concept is rooted in principles of egalitarianism, intending to mitigate poverty and offer economic stability, regardless of one's job status or income. These payments are envisioned to empower individuals, giving them the freedom to pursue education, entrepreneurial ventures, or creative endeavors, potentially leading to a more dynamic and innovative society. Economically, proponents suggest that UBI could stimulate consumption, drive demand, and smooth out economic fluctuations caused by downturns or transitional periods in an increasingly automated economy. Despite its idealistic allure, UBI also faces formidable challenges and criticisms. The primary concern revolves around the source of funding. Sufficiently supporting a universal income might necessitate high taxation rates, particularly on the wealthier segments, potentially stifling economic motivation and investment. Moreover, detractors question the societal implications of offering unconditional income, such as possible disincentives for work, although empirical data from various pilot studies suggest these effects are generally minimal. A comparison between UBI and flat taxes drives to the heart of a broader discourse on the role of government in income redistribution and economic management. Both systems propose simplifications of current models, yet their endpoints diverge sharply in terms of equity and social welfare. Where the flat tax streamlines and potentially regresses, UBI proposes a proactive redistribution aiming to lift the baseline for all. In summarizing the juxtaposition between these two theoretical frameworks, it becomes evident that each harbors its own set of advantages and vulnerabilities. The choice between flat taxes versus UBI isn't merely a decision on fiscal mechanics. It reflects deeper ideological beliefs about the role of government, the nature of societal responsibility, and the paths toward economic justice and sustainability. As we move further into the 21st century, with its myriad challenges and opportunities, the dialogue surrounding these concepts will undoubtedly evolve. What remains constant, however, is the imperative to tailor our tax systems not just to economic equations, but to the broader ethos of equity and shared prosperity. The conversation on taxes ca future will continue to be a crucible for our values and visions, demanding thoughtful debate and innovative solutions. The direction we choose will sculpt the economic landscape of tomorrow, influencing not just markets, but the very essence of our social contract. Share your views and comments below. We welcome your insights and thoughts to further this complex topic. Thank you.